Hey guys, what is up? Welcome back to my channel. I am former professional BMX racer Kathryn. Some of you guys may already know me. Some of my BMX fans came on over to this channel, so it's good to see you guys again. Hopefully I could go to another BMX National and meet some of you guys again. There's my 6-foot trophy in the back from racing BMX all those years. Yeah, so more Bitcoin news for today. I just got done doing a video from yesterday's Bitcoin news. Today is September 25th, 2021. Altcoin Daily says Bitcoin and top 5 altcoins about to go crazy. So yesterday's news was a little like bearish, but today's news is bullish, So some altcoins are about to go crazy. Supposedly trying to ban Bitcoin again, but here's why you shouldn't take it too seriously. So some people aren't too concerned about trying to banning Bitcoin. It's just to scare people out of the markets. Bitcoin is like Kenny from South Park, who dies every episode but comes back in the next, Morgan Stanley analyst says. That's pretty funny. Then what's next for cryptos as Biden picks Bitcoin skeptic to take over U.S. banking regulator? Biden picks the United States of America President Joe Biden picks a Bitcoin skeptic to take over the U.S. banking regulatory. Woo, that sounds interesting. I shall get into that in another video. But in today's video, I want to talk about why U.S. regulators, don't even know why I said that, you guys don't ask. Why U.S. regulators are now rushing to regulate cryptocurrencies, starting with stablecoins. So now they're trying to regulate cryptocurrencies. You guys, this is why people are getting so bullish here in the markets, because they're rushing now to regulate these cryptocurrencies. That's going to skyrocket the prices, guys. Like I told you, now may be the last time to buy when it hit 85 cents. Now they're rushing to regulate cryptocurrencies. Hear this, guys. The U.S. Treasury is urgently taking steps to create a regulatory framework. That's why I said regulatory, because I saw the word down here. Framework for cryptocurrencies, especially stablecoins. Well, that makes sense. We're entering a financial crisis. Okay, the framework seeks to regulate cryptocurrency market before it leads to another financial crisis. We are heading into a financial crisis. Before that even happens, they want to regulate these cryptocurrencies. Woo! That's already telling me something. Before we even get into the article, I have my theory on what that means. I kind of want to tell you guys, but then I don't want to be wrong. But I'm going to tell you guys anyways. We're heading into a financial crisis, and we need something urgent, like XRP's on-demand liquidity, right? Right? That's what we need. All right, cryptocurrencies. Ooh, scrolled a little too far up. Cryptocurrencies are a hot topic in Washington. The rapidly expanding cryptocurrency market is worth over $2 trillion, roughly equivalent in value to all US dollars in circulation. They are volatile. It just goes up and down. It's just more room for people to profit money. But their wide adoption and growing interest in their underlying blockchain technology have created a new investment class. That's us, guys. New investment class. We're in early. So the earlier we are, the richer we could be in the future. And we're going to change the world, right, guys? Cryptocurrencies are transforming the banking and finance sector, attracting hundreds of millions in investments from some of the world's top financial institutions like JP Morgan, Citibank, and Standard Chartered. Woo! Hundreds of millions of dollars could be pouring into cryptocurrency. All right. Sounds good from these big banks. The increasing number of onboarding of both retail and institutional investors, even from the traditional market, has made it impossible for regulators. I'm getting regulators and regulatory mixed up. impossible for regulators to only warn about volatility from the sidelines. They want to warn of volatility. They want to warn of that. That could scare people out of the markets. Do not be scared, guys. Do not be scared. Fear is a low vibration frequency. I am in 5D. Who else here is in 5D? Put that in the comments down below if you're in 5D. We are not afraid. Federal regulators in the US, Europe, and other countries are now racing to address the potential impacts of cryptocurrency on consumers, and financial markets. In the US, the Treasury Department is working with other agencies to urgently introduce tighter regulations for the budding industry, the New York Times reports. Interesting. Why stable coins first? Bitcoin, the top crypto asset by market capitalization, is responsible for about half of the industry's market cap, but it's notably also the most volatile cryptocurrency. Ooh, that's interesting. They like to make people believe that the altcoins are the most volatile, but it's Bitcoin. Guess what? Bitcoin keeps going down. Okay, therefore, investors in the market introduce stablecoins, a type of cryptocurrency pegged to fiat currencies like the dollar on a 1-to-1 ratio, or to other baskets of traditional assets like unsecured debts in corporations. Stablecoins protect investors from wild price swings common in the cryptocurrency market. They enable them to make payments and preserve the value of their initial investments in case of rapid downward market movement. Now, before we go on, I was reading about how XRP could take the derivatives market and be backed by gold. Major money in those markets. That could put XRP at a crazy number, and that can make XRP more stable. All right, moving on. Investors can also use stablecoins to switch between different cryptocurrencies while trading without having to convert them into cash. Such use cases have given a tremendous rise in the value of stablecoins. The most popular stablecoins, Tether and USD Coin, are jointly worth approximately $100 billion. However, as authorities have found out, stablecoins might not be so stable after all. This is because private companies behind these cryptocurrencies are mostly unregulated, posing major threats to the US economy, especially as more people adopt them. For instance, if a company lied about the validity of its reserve assets, this would lead to inflation. Similarly, it would be catastrophic to the economy if stablecoins investors made a bank run and withdrew all their assets at once due to various reasons, such as fear, doubt, and uncertainty, which is FUD. Fear, doubt, uncertainty. Regulators should move quickly. Federal regulators are playing catch-up to prevent such scenarios before it is too late. Michael HSU, not even going to try to pronounce his last name either, the acting comptroller of the currency, recently said that if they remained unchecked, cryptocurrencies will trigger another financial crisis, which is more FUD. It feels like we may be on the cusp of another with cryptocurrencies. Nellie Liang, Secretary of the Treasury, who is working on the regulatory framework efforts, said that it is paramount for agencies to act quickly to ensure there is an appropriate U.S. regulatory framework in place. Wow. So they're already talking about regulations, guys. Ooh. The Treasury has been gathering information from various industry experts on this subject. Wow. The first step the Treasury will take towards the effort to issue a comprehensive report with recommendations in the fall that will form the template for regulations likely to be drafted in 2020. 22. Told you guys that was one of my theories. 2022 could be a big year. Before I even read about this, 2022 could be a big year. Cryptocurrency investors and blockchain developers have been very receptive to talks with regulators for two main reasons. First, they want regulators to make informed decisions about cryptocurrencies that will benefit the industry. Secondly, they believe that moving forward, the industry does indeed require proper oversight to introduce order, thereby attracting more investors and increasing adoption globally. Increasing adoption globally. That is crazy, guys. All right, well, I'm going to end it here. That's about it. Wow. Maybe I should just, I'll just finish it out. I'm almost done here. Yeah, so the potential rules and the expected recommendations include a mandate for stablecoins issuers to always have sufficient liquid reserves, enough to meet investor withdrawal demands at all times. Similarly, the technology behind the currency should be robust enough to handle heavy and simultaneous traffic without crashing, unlike what recently happened on the Solana blockchain. Ooh, okay. The process of creating new stablecoins will also be put under the radar to ensure the sufficient security and data privacy protection for consumers. The U.S. Treasury also plans to introduce a mechanism for preventing the use of cryptocurrencies to launder money or evade taxation. So, yeah, they are definitely, it said, this could happen in 2022. Why U.S. regulators are now rushing to regulate cryptocurrencies. All right, guys, that's the video for today. Like, comment, subscribe, share, and come on back. Come on back and hang out with me tomorrow. All right, guys, I hope you guys have an amazing day. All right, bye.